It is 5 minutes past 10 in the morning on Thursday, the 21st of May. Now, on today's market broadcast, I've got two guests today, and it's going to be all about energy because, as you will already know, we've seen some incredible volatility going on in the oil markets in recent days. Seems like oil might be making something of a recovery, which could be a good signal for the global economy in general. But just in general, we've also seen a huge amount of money flow into the renewable space at the very same time. So there's all manner of conflicting signals and strange sights to be seen within the energy market in general. But anyway, on today's broadcast, we have got James Allen and Kip Winder, who both work together on one of our newsletters called Exponential Energy Fortunes. Now, in terms of just where renewables are now and some of the incredible sort of speculative flows that have gone into the space, gentlemen, what is this really indicative of? Is this retail investors who are staying at home and wanting to punt on the future of energy, or is this something more structural, so something more systemic?
A little bit of both, I think. I mean, what we saw in 2019 was large amounts of sort of institutional money sort of flow into the sector. A lot of divestment from sort of fossil fuels went into renewables. That was a trend that sort of picked up at the early part of the year. There's a real sort of momentum behind sort of the ESG investing. Pandemic happened, sort of a bit of a pause on things, and actually what we're seeing now is that trend sort of picking back up again. There is an increased focus on clean energy and energy transition, and that has really sort of captured the attention of retail investors as well. We've seen valuations for renewable stocks came down a bit in the immediate aftermath of the sort of the pandemic in February and March, but actually they bottomed out quite quickly and they resumed their upward trend. So now many of the stocks in our portfolio are actually above sort of pre-pandemic levels and marching ever upwards. Really, this is the trend that's has been a very exciting one to be part of. It's good times really, and what we're seeing this actually represented, also in the sort of the power mix. At the moment as well. So it's not just an investment story. We're seeing this actually replicated in actually the physical sort of electricity markets right now. We're seeing large amounts of renewable energy on the grid, and we're seeing fossil fuels, coal, coming off the grid. We're in the middle actually of an ongoing record on the UK power grid where I think coal has not a single lump of coal has been burned on the grid for 40 days and counting, which is a new record, and that's not been seen since sort of the Industrial Revolution. Likewise, we're seeing records for solar. In April, we had a sort of on average 30%. I think a peak actually of 30% of power demand was met by solar, and we're seeing actually wind. Even though it's lovely, sort of quite benign conditions, I suppose, but even wind is well up from levels last year. There's more amounts of wind coming onto the grid. So all in all, it's just a very positive time in the renewable space, really. I think this is a bit of I've been calling it a sort of postcard from the future. Lots of power on the grid. It's obviously in large parts due to sort of low power demand, but in future this will be because more and more electricity is powered by renewable sources, because that's the only game in town.
Right. Thanks for that, James. Just looking at the portfolio that you run at EEF, Justin, you never would have really thought that we were in the middle of an economic lockdown and that traditional energy had been whacked as hard as it has. I mean, some of the stocks you've got in your portfolio are really flying, even through this, even actually through the lockdown. There's one in particular we can't reveal too much on the air, of course, but you tipped it at the beginning of March. And this is very closely connected to the renewable energy space, and it's up by over 100%, right?
Yeah, that's right. So it's a stock in a particular segment of the field. I don't think I'm giving too much away. It's to do sort of transportation. We tipped it in sort of early March, and then it's been a really, really exciting story. It's been quite a volatile ride so far. I mean, it's at one point it was getting close to sort of 200% not so long ago. It's come off a little bit. There's a few sort of short sellers in the market. But I mean, this is a long-term play for us. We're really looking for sort of the next sort of 5-10 years for this stock. I think it's a really, really exciting story. It's got a lot of interest all around the world. Lots of sort of big players are backing this share. And yeah, we got in as soon as we could. It's been a really good ride so far.
Right. Now, Kit, we've not introduced you yet so far, but could you expand on what you're seeing in the renewable energy sector at the moment? What sort of notes you're taking down as the days go by?
Yeah, well, thanks, Baz. I'll just try and talk about the stuff we've covered so far, really. I mean, certainly the arrival of institutional money is something I'm trying to look at a little bit more because for the first time, I'm seeing some sort of actively managed renewables funds, which are, green in body as well as in name. Because, previously when I've looked, you sort of have some slight ESG, greenwashed, green marketing labeled
Yeah.
funds, which essentially just track the American index, but weren't really, if you were looking to invest in the future of energy, they weren't for you. But for the first time, we're starting to see some proper pure play green funds coming through, which is nice to see. And then also just starting to see some big bank names on the investor lists of these small companies, and that's obviously very exciting for us because we're in already, and the wave of institutional money can only really be outdone if a central bank gets involved, as we know. And then just on what you said about green stocks still doing well despite the pandemic. It's a very wishy-washy answer, but I wonder whether there is that element of people, sitting in one crisis and thinking about the next one. We've heard so much talk about the climate crisis, but everyone thinks, we'll worry about that when it gets to it. But, with the pandemic, we're seeing that that's not really the smartest response to these kind of long foreseen tragedies. So yeah, I wonder whether that is playing on people's minds a little bit. But also just that throughout this crisis, as James said, the news flow has been so amazing, whether it's record periods of time without using coal or record amounts of solar generated. So you have a combination of a news flow and a sort of slightly wishy-washy sentiment. And, the companies are doing well, they're growing fast, and investors still like that despite what we're seeing on a global scale at the moment.
Yeah, and let's not forget that the backdrop to a lot of this is that governments are preparing sort of stimulus packages worth sort of trillions and trillions of dollars, really, or trillions of dollars, to sort of kickstart global economies around the world, giving it a sort of a green tint. Sort of high capex, sort of solar and wind is a perfect place to put sort of public money right now. It's long-term growth. It supplies jobs. All while meeting sort of climate change targets. So, that is a good news story, really underpinning some of this resurgence in green renewable stocks. There's an expectation that we will see sort of large amounts of government stimulus packages go towards green energy and the clean energy transition, really. So, I think we will see that. I think we're already starting to see that. So yeah, all in all, it's just a positive time. Obviously, the pandemic is still we're still living in among the pandemic. Energy demand across the board is down. So this year we'll see what happens. Really, I mean, a lot of this higher stock valuations is we're pricing in for sort of a good recovery sort of next year and beyond. Really, I suppose.
Right.
But yeah, it's just as Kit just said, that I mean, if, we filter, we look at the sort of Google News and what's going on in the renewable space, and we're just hit by a sort of deluge of positive stories each and every day. We've got some of the biggest sort of utilities still plowing lots and lots of money into renewables right now. This is in amongst the pandemic. It's just a really exciting time to be in the sector. I think there's a massive awareness that what we need to come out of on the other side of this pandemic is clean energy and decarbonisation.
With that said, however, I mean, we have started to see something of a recovery in the oil market, right? We saw Brent crude managed to make it to $35 a barrel the other day. What do you make of that rise? Something of a rise. $35 isn't exactly a hugely high oil price, but considering what was going on in the West Texas intermediate market in March. This does bode somewhat well for the traditional oil and gas sector, right?
Yeah, I mean, put in context, obviously, prices at sort of $35 are way down from sort of $60 and upwards, sort of pre-pandemic levels. But yeah, obviously, prices were a lot lower a month or so ago. We're lockdown sort of restrictions are coming, I suppose, already starting in some places. That stimulated a bit of extra sort of oil demand. People are getting back in their cars. Actually, in China, it's been seen, and now other places, that people aren't using public transport to get back into work because they're worried about the virus, and they're actually driving into work. So that is picking up, the bit of residual demand There, we've seen sort of inventories in the US ease a touch, suggesting sort of an easing of the oversupply that we saw. So some of those sort of big worries about storage and where they're going to put this surplus of oil are easing, and that's just it's been it's been a positive last couple of weeks in the oil markets at $35. It's, that would have looked a very toppy price a month or so ago, but yeah, there we are. I mean, you can't really see it getting back up towards $60 again in the short term. It won't happen in a hurry. There's still huge question marks over demand, even coming out of the pandemic. Some of these big sort of structural changes might resulting from the pandemic in terms of how much we are going to sort of travel, use airplanes and things like that. There's a long-term situation happening in the sort of just in the car markets. There is a shift over from petrol cars, ICE cars to electric vehicles. That's not going away. That's going to probably pick up at some point again. Yeah, I don't think we'll be getting back up to $60 in a hurry again. But it's been a nice little resurgence for any oil sort of traders out there.
And on that note, with the not being much of a no rosy scenario on the horizon, we've started to see some actual bailouts or bailout packages being prepared for the U.S. Oil and gas sector. What do you make of that? Because this is something you've been predicting for some time, that the shale producers were going to go bust, what you call the bust of subprime oil. I mean, do you think this is we're just going to see more and more bailout packages prepared as these companies, which can't be profitable at the likes of $35 a barrel, when they eventually go under, or they're about to go under, that they're just going to get bailed out again by the US government?
Yeah, this is something we've been writing about for a long time, actually. We predicted that the US shale sector would be bailed out at some point. We obviously didn't predict the pandemic would sort of accelerate that, but the US shale sector has been a sort of bit of a busted flush for a while now. It's never really made money off its own back. It's always relied on sort of institutional subsidies, if you like, if you want to put it like that. It's been propped up by institutional support. That well was running out long before the pandemic happened, and the pandemic, which has obviously crushed oil prices, has accelerated the process. So, the shale sector is already being sort of the recipient of direct and indirect subsidies in the US, not just oil, actually coal as well. Coal-powered utilities have been sort of set for sort of potential bonanza, really, under sort of federal government plans. It's all highly predictable, really. It's also a bit depressing in some ways, but rest assured, I mean, they can give these oil companies as much sort of government money as they can, but it actually won't save the sector, because the long-term dynamics of the shale sector, coal as well, it just faces downwards. It's never really made any money. And what it also won't do is it won't obviously do anything with the oil price, or in actual fact, it will. If you're resuscitating the US shale sector, all it will do is actually depress oil prices further. So this is not not a sector I would particularly want to be in, the shale sector, or coal for that matter. But yeah, highly depressing in some ways that they've received sort of this bonanza of sort of federal government money, I suppose.
Right. I mean, it does feel like effectively, it's interesting that everyone's getting subsidies now. So you got the renewables have traditionally always had some kind of subsidy, and now you've got even the traditional energy market is getting subsidies as well. It feels almost like this is sort of a trend where more and more money is just being put into some form of energy production, in assisting energy production to some level or other. I wonder what that maybe reveals over what the overall demand for energy must be when there's so much assistance in creating it in the first place. Kit, I think you mentioned before we went on the air on what the future for subsidies were, and the different forms of subsidies that are being brought to the space. Could you expand a bit on that?
Yeah, I suppose a little bit. I suppose one of the interesting things, if you look at shale, for example, is that one of the reasons it struggles so much is that it's shooting itself in the foot a little bit. It's a kind of paradox where what shale has done is dramatically advance the technology for extracting oil where it wasn't previously available. And it does it, I think, more cheaply and more energy efficiently. And so as a result, it can churn out oil onto a market that didn't wasn't desperately in need of much more. And so by innovating, it has oversupplied the market it wants to sell into. And that has, in part lowered the prices. That's one of the reasons why the crash happened. It wasn't just coronavirus. It was a long-term build-up of oversupply in the whole world market. And so, it is almost by definition a pro-subsidy industry in America. And as James said, he's been writing about this for a long time, which is that, the better shale gets, the more subsidies it's going to need, because it's better at doing something, and that in turn destroys its own market. So it's sort of, it demands subsidy every improvement it makes, which is a kind of surprising thing. And then elsewhere in the world, there's a sort of renewable subsidy thing where there's a deadline. So it says you have subsidies until the end of 2020. And so a bunch of these were going to run out on the 1st of January next year. But all the very generous and concerned governments have realized that actually leaves wind power a little bit short, and so wind power subsidies are being extended for an extra 2 years. So all the projects that have been delayed this year that were planned in order to just fall under the 2020 subsidy bracket won't lose out by not having the subsidy. So a lot, in an odd way, although it has impacted these markets, the extension of the subsidies might help them. So they'll have a slightly longer run up to complete these projects, get the government funding, and get themselves off the ground. So over the world, we're starting to see in China, America, and in Europe as well, that subsidies which would have helped this year aren't just being forgotten and cancelled, but they're being extended so that the trend of increased capacity that we're seeing can continue.
I think sometimes the subsidy question with sort of renewables in particular is sort of overplayed somewhat really these days. I mean, you're still getting lots and lots of unsubsidized solar. Wind still, in China, come onto the grid, huge amounts. Obviously, renewables is a relatively new industry, nascent industry. It has required government subsidies. It still does require government subsidies in some parts, but those subsidies, in the sort of short to medium term, will be sort of they'll become fewer and fewer, and renewable companies will sort of be weaned off subsidies. You're now seeing the sort of the cheapest electricity, the cheapest type of electricity anywhere in the world is sort of unsubsidized solar. That it's now a ridiculous price. It's 2 cents a kilo, well under 2 cents a kilowatt hour. This is the cheapest electricity in history. So I mean that's we're getting sort of solar just undercutting existing coal capacity easily. That's solar plus storage. So I think the future is not going to be a question of government subsidies. I mean, the future for renewables really is the roadblocks. Will be more sort of technological question marks rather than one of government subsidy. It will be trying to get sort of grid scale storage up and running, trying to expand the capacity of grid scale storage. They're the question marks that we'll be facing in the sort of months and years to come, I suppose, and not so much subsidy. I mean, fossil fuel companies have always been the recipients actually of huge amounts of government subsidies. It's not maybe been so explicit, but they've always been there. But lots of people sort of jump on to the green energy for having had or having requiring public money. But that is just the way as a young nascent industry coming up against big old legacy systems such as energy. That's the way it has to be. And if we want to get sort of clean energy transition, that's the way it has had to be. But we won't be having these questions in a few years. I don't think it'll be different types of questions.
Yeah, on definitely. That note, with the you say the technology is the next big gap. So what is the could you expand on what the next big sort of tasks for the renewable sector are when you're speaking of the grid technologies that are required to really commercialize and make this more mainstream and develop it across cities and within rural sectors as well. What really are the big tasks? Because as you say, it's not a question of subsidy in the future. Well, it's going to need technological development from where it is now. So you're counting on being that technological advance occurring relatively soon. Well, when you're looking at that, what are the big tasks for the renewable sector or really technological advancement to really tackle in the near term?
Energy storage, in a word, really is the big one. Just trying to get sort of big, large scale energy storage projects that have the capacity to absorb surplus power from large scale sort of wind and solar projects. I suppose that's the one. I mean, we're seeing lots of advances on sort of the micro level of energy storage and batteries, sort of in our cars and things like that. It's now, electric vehicles are now much more economical to run, but it's the large scale, it's the technological improvements that need to be done to sort of pair up with large scale sort of intermittent wind and solar. That would be the big one. There's lots of exciting things happening there, but that would really drive renewable wind and solar projects to the next level, I think. But there's lots, as I say, there's lots of exciting things happening there. There's lots of exciting companies that Kit and I look at in that space. Yeah, it's a really, really exciting market to be in. But that's the that'd be the big one, I would say.
Kit, do you have anything to add to that?
I mean, James is absolutely right. I think that is the main one, because the intermittency of solar and wind, where the sun shines in the day and the wind shines more, it's 1 week and not the next. Having storage solutions that can spread out the supply in order to meet the consistency of demand, that certainly is true. I think one other thing might just be sort of very efficient electricity connectors, so these long range interconnectors, so that when it's sunny in Spain but windy in England, we can swap, and that's not something we have really developed at the moment, but in a future where weather is going to be obviously very disparate, and we don't have the traditional fuel input supplies of oil and gas in such high proportion, the ability to use electricity that was generated in Spain in the UK almost instantaneously, that'll be a huge development. But that's slightly further away than energy storage.
I mean, the UK does have sort of power cables connected to mainland Europe. I mean, we had lots of projects, interconnected projects on the table before Brexit. Lots of those have been sort of paused, I suppose, because of working out the sort of different rules in terms of our relationship with the EU. But yeah, you're right. I mean, that's enabling sort of Britain and the rest of Europe to be really, really interconnected with large scale sort of interconnector projects is a big goal of pre-Brexit, it was a big goal of the UK, and is a big goal of the EU, and it remains a big goal of the EU, just to really, so UK and other places can take advantage of surplus electricity in one region and or high demand in another region. So yeah, that's an ongoing situation in the power markets, and that will also help with sort of price discovery, I suppose. But yeah, that's a good point by Kit, really. I mean, that's something that power traders have been calling for a long time, really. But I can't say we are connected. There's a few interconnection projects already up and running. Obviously, there's a couple to France and Holland as well. But there were certainly before Brexit a few more on the table.
In terms of, just to round up, I think, in terms of what you're looking at in the more short term and what you think our listeners should be looking at as indicators of the health of the energy market as a whole, and maybe an indicator of what's to come in the future, what sort of short term things do you think we should be taking a look at? I mean, what kind of indicators do you look at?
Short term things I'm looking at. I mean, there's the big story in town for me is the hydrogen space. I mean, I think it's still in a really exciting space. I think hydrogen, unlike some other sort of fuel sources or resources, it can decarbonize lots of different sectors. I think there's so much excitement and interest happening in that space right now. If I was sort of new to the green energy space, the renewable investment space, that would certainly be a space I'd be looking at straight away. There's an index of hydrogen companies, which is quite a new index, started last year. That's sort of breaking new records every single day. Gives a nice overview of what's happening in the excitement's happening in that space, really. The hydrogen space, fuel cell cars, hydrogen electrolyzer companies, that's a really exciting space to be in. But that's also replicated across the board in sort of wind and solar projects. We're seeing the biggest utilities out there now. They're sort of renewable utilities. They're sort of solar wind farm developers. They're not sort of the oil and gas firms anymore. That's just representative of the way the wind is blowing. It's going out of fossil fuel companies and into renewable firms. And I think that's going to remain the case this year, no matter what sort of subsidies or federal government money that goes into the shale sector or the oil sector in the US or whatever. This is a trend that isn't going to go away, fossil fuels into clean renewable energy.
How about you, Kit?
God, it's so annoying and boring, but I do think the policy response to this current crisis is going to be very interesting. I mean, James mentioned the sort of various Green New Deals that are creeping out over the world. The EU is definitely planning a big one. The American one is famous for different reasons. But yeah, that certainly will be interesting. I think, the presence of the current crisis giving added focus to the next one could lead to some pretty huge initiatives on a continental scale. And if I may, Boaz, a sort of longer term one as well, which I think is really interesting, is we talked about the oil price today. And one thing that I really can't get my head around, so, maybe James has got an answer or you have an opinion as well. But this idea that I can't figure out why the oil price matters so much anymore, because for the industry, they need a higher oil price, right? But the way renewables are going, and with the transportation going electric, as oil starts to compete with renewables, the oil price will need to fall quite significantly in order to compete with renewables as a fuel for transportation and for other things. And yet the oil industry needs much higher prices. So I can't figure out which way that's going to go. But I certainly think that the divergence between consumer need for competitively low oil prices and industry need for profitable high oil prices is going to be a really interesting story, not in the short term, but over the next decade or two.
Yeah, I think sort of the relationship between oil and renewables has been broken somewhat. I think we've written about this quite a lot in sort of recent weeks and months. I mean, you just need to look at, if you're purchasing an electric vehicle right now, which I had that, I did do that last year. What you're paying at the pump for petrol isn't really a factor in your purchase decision of an electric vehicle. You're really looking at the outright, the sticker price of the electric vehicle itself. Battery prices have come down a hell of a lot over the last 5 years, really accelerated in the last couple of years. And then after that, you're looking at your ongoing costs for the electric vehicle, which are really, really negligible. They run really well. Electricity's cheap. I charged up my car the other day I got about 120 miles out of it, and it cost me something like £6. That's when I popped into the office to do something in the office, and I just charged my car while I was there. So I think increasingly the oil, the renewables relationship is not so true anymore. I think renewables can survive very, very happily without a strong oil price.
I think what I would maybe answering a question with a question, but I think a lot of what you describe, Kit, assumes that the use of hydrocarbons and the use of renewables is even across the world. And maybe in countries, for example, which don't have such a strong electricity infrastructure, as here we are in very cosmopolitan, very developed London. If you go to somewhere like Brazil, you're going to find that the support for driving an electric car everywhere is going to be a lot less, and so of course the demand for hydrocarbons is going to be higher because as we've already discussed in this conversation, some of the technological advancements when it comes to battery storage, it's not been the dream hasn't been fully realized yet for really fast and really vast energy storage that would allow you to drive for days and days and days without needing to charge it up. So if you're in an area, if you're in a part of the world which doesn't have this, some of the niceties that we enjoy here in the UK, hydrocarbons still carry a kind of premium there, and that would be. It seems as though while it starts in the city centres like we have here and in various places. In China, for example, where they've spent a lot of money on developing the electricity infrastructure, I think once that has spread around the world, then and there's that evenness of the ability to use electricity all around the world. rather than just having these sort of areas where there's really good electricity infrastructure and then areas where there aren't. I think that's when the question of oil, when renewables fully supplant oil. And then, of course, there's all the uses for oil other than simply in cars. I mean, you've got all the uses for hydrocarbons in plastics and all manner of materials, polymers. I think that will play some kind of a part in where this all goes from there. But that's just my musings on the topic, Kit. It is a very grand question, I suppose. It's something that whoever figures out the answer for where this really does go from there is set to make an awful lot of money.
Yeah, I mean, obviously, oil demand. I actually think we've reached peak oil demand. I think the pandemic has brought the peak oil demand story forward a few years. I think we were initially expecting it to be sort of 5-10 years down the line. I actually think this year will be, or last year actually would have been sort of peak oil demand. I think developed economies had actually already shown sort of peak oil demand a few years ago. They've been coming down. And I think even though, we might, peak oil demand might not have happened yet in sort of the developing world, as you just sort of rightly said, but I think that'll be offset by some of the big structural changes in the sort of the developed world in terms of less sort of transportation or less sort of airline travel, more people working from home and things like that. So it wouldn't surprise me yet if we've seen, already seen peak oil demand, which obviously poses an existential threat to the oil industry. Obviously, it's not going to go away overnight. Of course, it's not. It's too much of a lifeblood of the world's economy. But the smart money is already moving away from sort of oil stocks. Just look at their valuations over the last 5-10 years, and they're moving into clean renewable energy, and that's where the future is. And that's why we have a dedicated portfolio just to follow those and track those exciting stocks. Really, for us, it's the only story in town. It's a long-term play, but there's also some very, very exciting things happening in the short term, which has seen a huge ramp up in valuations seen just in the last few months alone. So it's a really good time to be in the sector.
I'm afraid we've run a little too much into the overtime, gents. So I think we're going to have to close it off there. But thank you both very much for joining me.
Thanks so much, guys.
Thanks.
That was James Allen and Kit Winder over at Exponential Energy Fortunes. I hope you enjoyed that market broadcast. We did last a little too long today, but we shall try and keep these podcasts a little shorter in future. But anyway, that is all from me for today. I shall be back again tomorrow with another market broadcast, and we shall see you then.